Welcome to the Tuesday edition of Tech Stocks Daily, your go-to podcast for the hottest tech news sizzling up the NASDAQ. Today we dive into Apple's teasing hints that have everyone speculating. Is there a new Air ready to launch, or perhaps big changes in digital payments? We'll also cover GitLab's impressive earnings beat and their eye-catching AI ventures. ACM Research is skyrocketing with eye-popping earnings estimates making waves in the semiconductor world. Meanwhile, CrowdStrike is on everyone's radar with their upcoming earnings report, promising high-stakes drama in the cybersecurity arena. Get ready for an engaging ride through today's buzzing stock market headlines. Apple's been making waves in the tech world today, and boy, do we have some juicy tidbits to unpack. The company at the heart of our digital ecosystems is pulling off not one, but two major maneuvers that have tongues wagging and fingers furiously typing across the tech sphere. First up, Apple is dropping veiled hints, and when Apple hints, we all listen. Tim Cook sent the X-verse into a frenzy with a cryptic teaser saying, "There's something in the air." Naturally, the question on everyone's lips is, what on earth does that mean? Are we talking about a new MacBook Air, perhaps sporting a shiny new M4 chip that will have us all contemplating whether skipping meals for a while to afford it is worth it? Or could it be an entirely unexpected product? Because mystery is Apple's guilty pleasure. Previously hinted reports from Bloomberg say we might see not one but two sparkly MacBook Air models in two sizes, a cozy 13-inch and a stretched-out 15-inch. But hold your horses, because the Air branding might stretch beyond the laptops. Rumors suggest a new iPad Air is also waiting in the wings. Imagine that, an entire Air party and everyone's invited. But wait, it gets even juicier. Whispers about a potential iPhone Air have surfaced, although that's more likely to crash the party in September. Either way, Apple knows how to drive us bonkers with anticipation, and fans are refreshing their news feeds faster than you can say innovation. Switching gears just a little, Apple's impact in the tech cosmos doesn't stop at captivating our anticipation for upcoming products. The tangible changes are happening right in your pocket as Apple carves its path into the cashless payment realm. Who can ignore the mammoth cashless revolution Apple spearheads with Apple Pay and Apple Card, making transactions as seamless as swiping up on your home screen? And it's not just Apple players who grow from this. Major players like Visa and PayPal stand to cash in big time. Visa's seamless integration with Apple Pay decorates it as the linchpin in the arena of digital payments, bye-bye wads of physical cash. Concurrently, PayPal dances to the Apple tune, escalating its reach in online payments and e-commerce. Today, Apple isn't just a tech giant brandishing stylish gadgets and provocative tweets. It's an evolving ecosystem, making cashless norms and heralding what could be the dawn of new devices. Yes, there's definitely something in the air, and whether it's wielded with a keyboard, swirls a pencil on a screen, or transmits digital dollars from afar, Apple's orchestrating a melody that has everyone getting in line while enthusiastically tapping their toes. Tune in as the week unfurls, as we're all tuned in to what Apple's magic hat'll deliver next. Don't blink, or Tim Cook might beat us all to the punchline with yet another surprise dose of tech brilliance. Hey tech aficionados, let's dive into why GitLab was making waves today. This week has been a parade of news for GitLab, shimmering brightly in the DevSecOps domain. That's development, security, and operations for the uninitiated. GitLab recently rolled out its fiscal 2025 fourth quarter earnings, and the numbers had everyone buzzing. GitLab didn't just sidestep obstacles, it pole vaulted over analysts' expectations. We're talking non-GAAP earnings of 33 cents per share, easily outstripping the projected 23 per share. And revenue? A cool $211.4 million, soaring past expectations of $206 million, while flaunting a 29% year-over-year rise. Wowza. So what's cracking the champagne at GitLab HQ? Well, for starters, their DevSecOps platform seems to be hitting all the right notes. By weaving development, security, and operations into a unified application, they're smoothing the crunchier edges of software development with a sprinkle of automation and community-driven innovation. Talk about having your cake and eating it too. Of course, GitLab isn't straying too far from the strategy playbook. Their latest mission? Sprinkle artificial intelligence magic dust across their platform. With tools like GitLab Duo, they're not just dabbling, they're deeply diving into AI to enhance productivity and turbocharge development workflows. Bill Staple, GitLab CEO, emphasized that AI integration is reshaping the software development landscape, helping clients churn out secure and efficient software faster, like turning that 5 o'clock traffic jam into an open highway. However, this isn't just a fairy tale takeoff. GitLab's fiscal feats are met with market temperance. Legendary Wall Street analyst Pinjalim Bora of JP Morgan gave mixed signals, reaffirming a neutral rating and trimming the price forecast slightly to $62 from $65. Clearly, there's some heel-tapping curiosity about potential market shifts and the macroeconomic ballet. Despite some dance floor friction, yes, I'm looking at that GAAP operating loss of $15.4 million, GitLab's managing a steady hustle. Their customer base grew, particularly those shelling out significant ARRs. They've dialed their revenues while dressing their fiscal expectations snappily for future quarters, showcasing a promising drive along the fiscal autobahn despite challenging competition. Fasten your seatbelts. GitLab has earmarked revenue guidance of $212 million to $213 million as it zooms into the fiscal 2026 first quarter. The company appears strapping, thirsting for market share, but keenly aware of the steep economic landscape. Don't sleep on GitLab. Keep your eyes peeled for GTK pulses, especially in AI facets. In a rapidly evolving digital arena, they are not just playing the game, but trying to change it. So sit back and watch as GitLab revs into the horizon, one AI-infused innovation at a time. Hey tech enthusiasts, let's dive into why ACM Research is making waves in the market today. Grab your favorite gadget, settle in, and let's decode this. ACM Research, a notable player in the tech market specializing in semiconductor equipment, caught the media's eye today with its roaring stock performance. Let's unravel the reasons behind this buzz, starting with their impressive earnings outlook. According to earnings estimates, which have a track record of driving stock prices, ACM Research is on a winning streak. What gives this an extra zing? The company's estimated earnings have been shooting up, spiking investor enthusiasm, and putting ACM Research on more radars than ever. One of the secret ingredients to ACM's success story is the Zacks rank, which isn't just any old rating system. It's got the chops to prove a consistent outperformance record. Climbing to a Zacks rank number 1 isn't something you do just by turning up. ACM Research has climbed this ranking ladder largely thanks to their arresting earnings outlook. So, in a stock market zoo, it's definitely the alpha of the pack right now. The numbers themselves tell quite the tale. Over the past month, ACM Research saw a 550% upsurge in the consensus estimate for their earnings. That's quite the jump, insinuating a promising potential for returns as folks continue their investment tete-a-tete with the company. Investors are particularly excited with ACM Research posting a 22% gain just in the past 4 weeks, suggesting it's not just the analysts but savvy market participants who believe in ACM's growth story. Zooming out a bit to look at this in the broader context of the computer and technology sectors, ACM Research is in a league of its own. While the average company in this sector grapples with a near 6% decline, ACM has sunned itself with a gleeful 61% year-to-date growth. That's akin to celebrating a sunny beach day while the rest huddle under umbrellas amidst tech sector stormy weather. Interestingly, ACM Research isn't just thriving within its sector, but also holding the high ground in its industry sibling circle. While the semiconductor equipment material services industry has itself seen a healthy rise of 32.7%, ACM is charging ahead, surpassing this with even stronger returns. In a nutshell, ACM Research is a bit like the nimble tech debutante making the rounds, with everyone from seasoned investors to market commentators wanting a slice of what looks like a very promising pie. Will their stock price keep soaring on these promising revisions? Only time will tell. But right now, investors seem to think it's a pretty sweet deal. So keep your eyes peeled, techies. ACM Research's story isn't just an article today, but maybe, just maybe, the beginning of a new chapter in tech stocks. All right, folks, it was quite the digital drama for CrowdStrike, and here's the scoop. CrowdStrike Holdings Inc., everyone's favorite cybersecurity superhero, trading on NASDAQ under the ticker CRWD, has been vibing hard on the news circuit lately. Why? Because their fourth quarter earnings are dropping like a hot new album, slated for release after the market wraps up on Tuesday. We're all waiting to see if their financials will soar or come in a little under the weather. No pressure, right? Our analysts and reporters are betting the company will pull in 86 cents per share on the earnings per share front, with a cash flow of around $1.3 billion bucks. Interestingly, this compares to last year's chart-topping 95 cents per share and $845.34 million in revenue. For my tech stock enthusiasts out there, that's a notable increase in revenue, but a slight dip in EPS. So let's dive into those analytics deeper, shall we? Here's where things get even more intriguing. The CrowdStrike stock has been throwing a bit of a bearish party, trading under some crucial short and medium-term moving averages. The poor thing is straddling under the 5-day, 20-day, and 50-day exponential moving averages, which basically means it might be struggling a tad with momentum in the very short term. Yet, do not fret entirely. Its 200-day simple moving average is telling us some bullish support is still buzzing beneath all that market surface pressure. Last but not least, we've got some juicy updates from our crystal ball-wielding analysts. The consensus so far? CrowdStrike stock garners a solid buy, with a price target dancing near $392.87. Holy revenue streams, Batman. That's an 18.34% upside projected. You know what they say, where there's smoke, there could still be a rallying flame. In the narrative of cybersecurity, feel pumped because CrowdStrike isn't just sitting in the bleachers. They've sparked innovation with the latest in agentic AI-driven security. This high-tech whiz bangs through the complexities with a 98% accuracy win rate, stringing customer-defined boundaries like a tech maestro. Talk data poetry. All right, time for all your clever comments and spicy analyses. What's your hot take? Will the potential bears push CrowdStrike lower, or do you foresee a Zodiac-like rebound of epic proportions? Blaze those comment sections below, and let's get the debate rolling. Engagete comme jamais. All right, tech investors, let's zoom in on GitLab and tackle the classic investing dilemma: to buy, sell, or hold. Given today's news and GitLab's performance, here's what I'm thinking. GitLab just released some pretty impressive fourth quarter earnings that smashed expectations. Their non-GAAP earnings came in at 33 cents per share, which is above the projected 23, and their revenue hit $211.4 million, surpassing the estimated $206 million. That's a 29% revenue rise year over year, folks. They're on a roll with their DevSecOps platform and are diving into AI integration. That's got growth potential written all over it. However, let's take a breath and look at the broader picture. Wall Street darling and analyst Pinjalim Bora from JP Morgan has given GitLab a neutral rating with a slightly lowered price forecast, from $65 down to $62 per share. On top of that, there's a GAAP operating loss of $15.4 million lurking in the shadows. It seems there's a cautious market temperament regarding potential shifts in macroeconomic conditions. So what would I do? Given these details, I'd recommend on GitLab for now. Here's why. While there are signs of strong growth and new opportunities through AI, the cautious analyst rating and macroeconomic uncertainties suggest we might want to watch how these evolve before making a big move. Sure, GitLab's story has momentum, but let's not forget they are navigating some fiscal headwinds too. For those already holding GitLab stock, staying put might be wise to see how things unfold in the next quarter, especially given their ambitious AI initiatives. New investors? Keep GitLab on your radar. But perhaps wait for a bit more stability or further insight into their fiscal 2026 first quarter projections. Remember, my word is just the first signpost on your investment journey. Always dive deeper and do your own research or consult a financial advisor to cater your strategy to your individual needs and expectations. The tech stock landscape can be as bumpy as it is exciting. Keep those portfolios as sharp as your tech skills. So, there you have it, folks. It's been a whirlwind of a day in the tech world. We've got Apple teasing us with cryptic hints about possible new Air lineup products, while shaking up the cashless economy landscape. GitLab soared past earnings expectations, but is keeping analysts on their toes with future market strategies. ACM Research is absolutely killing it with booming earnings estimates, and everyone's got their fingers crossed for continued growth. Lastly, CrowdStrike is playing the market like a roller coaster, with big expectations from upcoming earnings reports and a real turnaround potential in its cybersecurity innovations. Feeling geared up about today's tech? Maybe a bit hyped or curious to see how these stories play out? If so, hit that like button, smash the subscribe link, and don't forget to share this video with your fellow tech enthusiasts. Strap in and swing by tomorrow, where we'll be unraveling more tech tales and market movings. See you on the flip side.